There's a lot of nuance that goes into investing in public companies, how those companies make money, how they're ultimately going to make money for shareholders. So one of the things I want to do on this channel is dig into companies from top to bottom. How should we think about what a company's business is, what its business model is, and how it impacts the company's financials long term. So today I'm going to start with Airbnb and everything you need to know about this company, whether you're familiar with Airbnb and have been an investor since it came public, or whether you're new to this stock. Hopefully this will be an evergreen video that you can come back to at any time if you have questions about Airbnb. And I'll be adding more of these to this channel in the future, so keep an eye out for that. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. So one of the ways I like to start researching companies is simply looking at the business in the company's SEC filing. In particular, a 10K, which is the annual filing that companies need to file with the SEC. Companies give usually over 100 pages of documentation about how their business works, what their financials are, what risks are, and usually at the top is a fairly simple explanation of the business. So let's start there with Airbnb. Now, this is the business overview, and this is page 3 of this SEC filing. So right at the top, like I said, I'm gonna just highlight a few things. So they go into some detail about how the company started, how there's now 1.5 billion guest arrivals around the world. But this is where I think things get more important. They have 5 stakeholders, as they say, employees and shareholders, and then hosts, guests, and the communities in which they live. So that's the way that Airbnb thinks of itself as a business, is they're trying to serve all 5 of those groups of people by providing a platform. Now they go into a few different things. They want to make hosting mainstream, grow and engage the guest community, perfect the core service, and expand the global network. So that would be more business strategies long term. But you get down here to the bottom of this page, and this explains exactly how Airbnb thinks of its business. They have a platform for hosts, and a couple of key things. They're there to seamlessly onboard new hosts, especially those who have previously not considered hosting. This is something that the management team has talked a lot about on recent conference calls, is they want to make hosting mainstream so that anybody can start an Airbnb or turn an extra room into an Airbnb. That's, again, the way that the company thinks about itself. In 2023, they launched new pricing tools to basically help hosts be able to price their offering competitively based on other listings in their area. So kind of take some of that stress off of, well, what do I price my cabin or room at for different weeks? And so this is the kind of pricing tools that actually hotels pay a lot of money for other companies to provide this kind of service to them. So that's something that Airbnb is providing as, again, a platform for hosts. They also have a platform for guests. And what they say is they want an engaging way to explore a wide variety of unique homes and experiences, and an easy way to book them. So that's the platform and the service that they're offering to guests. And Airbnb sits in the middle. They facilitate the experience between the host and the guest. I'll get to that just a second in their revenue recognition. But again, I want to just highlight this. This is a platform company. So this is a technology company that's connecting people. It doesn't necessarily take the same ownership and responsibilities that a hotel does, for better or worse, but just important to understand that in the business model. Our system of trust, again, this is really how Airbnb was built, is how do you know that an Airbnb is going to be safe, that you can be able to go stay in an extra room in somebody's house? Well, this is the trust that has been built over time. So they have things like host and guest reviews, account protection, risk scoring, insurance, booking restrictions, all kinds of things. And you can criticize the execution of any of these things, but again, these are the pieces that management says is key to the business. Now, the next thing I want to go to is revenue recognition. If you're looking at a new company, I think you need to understand how the company works, and then also how it makes money, because sometimes how they make money is not necessarily the way that you think. Now, this is all the way down on page 76, so not something that a lot of these companies highlight, but I think it's important to understand when revenue is recognized and how cash comes in and out of the business. So I highlighted a couple of things here, and they give a lot of detail behind this, but Airbnb considers itself as a platform, which they highlighted in the business model, but the company's single performance obligation is to facilitate a stay. So it is not their performance obligation to say that this stay is going to be great or that the place is going to be clean. That's where that trust comes in between hosts and guests. Airbnb sees its role as facilitating the stay. As a result, the company recognizes revenue upon check-in, and its performance obligation is satisfied upon check-in. And the company has the right to receive payment for the fulfillment of the performance obligation. So Airbnb is not going to recognize revenue until someone checks into their booking. That's how the financials are going to work. That will come up a little bit later. I'll go through their recent letter to shareholders where they talk about things like bookings and revenue and cash flow. Hopefully this will give a little bit of background into that. Now, from a cash side, the company collects both the booking value from the guest on behalf of the host and the applicable guest fees owed to the company using the guest pre-authorized payment method. So here again, when somebody books something on Airbnb, they pay for it immediately, and that money goes to Airbnb. But Airbnb doesn't recognize revenue and doesn't pay the host until check-in actually happens. After check-in, the company distributes the booking value to the host less the fees due from the host to the company. So this is kind of a cash arbitrage for Airbnb. They get to collect money that isn't owed to somebody else for potentially weeks or months in the future. So now you can already start to see some of the ways that Airbnb is differentiating themselves from some of the other travel companies and hotel companies around the world. They're just simply providing a platform for people to list their places to stay and for guests to come and find a place to stay. And they're the connective tissue there. That means that the business is much more scalable than a lot of hotel businesses. And it potentially means that once customers are coming there to plan a vacation, they could add all kinds of ancillary services that, again, they're not going to actually be facilitating. They're just going to be a platform in the middle. I think that will come up in just a little bit when I talk about what Airbnb might become in the future. But that's the important thing to think about, is that this is a platform company, and platform companies are very high margin. They generate, if they reach scale, they can be very, very profitable, and they can grow into new areas and adjacent businesses relatively easily because customers are coming to them for a given service. So if they're adding adjacent services like experiences during your stay, like making sure that the house that you're renting for a week is stocked with food, there's all kinds of different things that Airbnb could move into in the future that they haven't yet, but they've kind of been talking about this as their developments for the future. So let's go to some of the recent financial results and put some of the business model and revenue recognition things into context. So this is the most recent quarterly filing from Airbnb, and you can see a few things here that should be familiar. Revenue, $2.2 billion. That's going to be bookings that have actually already checked in. They're going to put the year-over-year number, the growth excluding foreign currency. Remember, this is a global company, so foreign currency is going to play a role in their earnings. Net income or loss, adjusted EBITDA is going to be what companies like this try to say their value should be based on is adjusted EBITDA. One of the things they pulled out between the loss and adjusted EBITDA is this $1 billion withholding tax that should be a one-time charge. But again, Airbnb is the facilitator between the host and the guest. So they're going to collect a lot of those fees and handle those fees for a lot of those hosts. One that potentially got overlooked in Europe was $1 billion worth of taxes that should have been collected. So that's what that charge is related to. Free cash flow, $46 million, but $3.8 billion for the full year. Now, again, this is going to include cash that's coming in that has not been spent on future bookings. So the money that's held on behalf of hosts. So this is what's called a negative cash conversion cycle. You're collecting cash before you actually owe it to the party that is providing a service for you or a good for you. So grocery stores do this, where you pay for your groceries, they get paid immediately, but they don't owe their vendors for 30, 60, 90 days. Similar trend is happening here with Airbnb. So it's a cash flow positive business and should continue to increase cash as the company grows, even if it isn't profitable. A little bit strange how that works, but I'll get to how this can actually be a benefit to the bottom line as well. Gross booking value. This is again going to be the amount booked. This is not money that is going to be generated in revenue for Airbnb, because this is going to be the full booking. This is going to be the money that's going to hosts and the money that's going to Airbnb. So remember, Airbnb is not recognizing revenue for the entire stay. They're only recognizing revenue for the piece that Airbnb is actually facilitating, the fees that are associated with the stay. So this is why Airbnb is going to be so high margin. If they included that entire booking value, they would have much, much more revenue, but they would be a much lower margin business. So just important to understand that distinction there. Nights booked, again, this is just going to be a proxy for how much activity there is on the platform. A couple of things that they talk about each quarter that I think is important to understand from a supply and demand perspective. What you actually want to see if you're an aggregator like Airbnb is more supply coming to the market. You want to be the go-to place for hosts, because if you're there for hosts, guests are going to follow. Now, both sides of that are true, but if you don't have the actual listings and your listings are going somewhere else, that's a fundamental problem for the business. So trip length, the general longer trips are getting to be more common. 19% of gross nights booked were over 28 days. Average day rates, this is a little bit confusing too. What Airbnb would like to see is average day rates come down. They want their service to be more affordable, so more people are going to stay. You expand the market if you have lower day rates. If let's say the average day rate was $300 or $400 per night, you're gonna have a smaller group of customers who will potentially consider Airbnb. And we know those nights are available, but if the average night is $100 or $150, now that's much more competitive with a hotel. That's how you grow the market and grow the business long-term if you're Airbnb. And here again, supply, you wanna have supply growing. This is the most active listings that they've ever had was in Q4, up 18% from a year ago. So a couple of things I want to highlight related to the revenue recognition that we talked about earlier. At the end of 2023, which is the column on the right here, Airbnb had $6.9 billion worth of cash, $3.2 billion worth of short-term investments. And this is that number right here. This is $5.9 billion in funds receivable and amounts held on behalf of customers. That's the money that has been paid by customers, but has not yet been paid out to hosts. You see that exact same number right here on liabilities, funds payable, and amount payable to customers. This is not Airbnb's money, but they do keep it on the balance sheet. The great thing about that is if you go up here, Airbnb gets to collect interest on that cash that they're holding on behalf of customers. Now, some of this is related to Airbnb's own cash, but last year, $721 million of interest income just from cash on the balance sheet. So great that they not only have a great balance sheet, but also an added benefit that they get to invest the billions of dollars that are being held on behalf of customers, and just a nice little income stream there for Airbnb on top of the core business. Now, before getting to what I think the strategy is going to look like going forward, let's go through some of the financials and the financial trends for the business. This is a look at Airbnb's revenue since the March 2021 quarter. These are all trailing 12-month numbers. So you can see that the compound annual growth rate is a really, really impressive 47%. That's obviously slowed down a little bit, but these were coming out of the pandemic, so you expect that high growth rate in that 21, 22, 2022 range. You also see a ton of operating leverage in the business. This is net income, and you can see that that improved really, really rapidly. They had a ton of challenges during the pandemic, and that reverse cash conversion cycle that I talked about earlier, that actually went in the opposite direction during the pandemic when everybody was canceling their trips and Airbnb had to fund those. They had to raise money really rapidly in 2020. That resulted in losses, but that turned around really rapidly when they cut costs, and that gave them a ton of operating leverage up to the profitability that we see now. And like I said, that was impacted by that $1 billion charge in the most recent quarter. And free cash flow, you see a similar trend, $4.2 billion over the past year. This is not a cheap stock, 23 times earnings right now. On a forward basis, the price to free cash flow is 27. So $126 billion market cap, you pull out the cash that they have on the balance sheet. This is still an expensive stock, but it's also a very high growth company. And this is where I think the company's optionality going forward is really interesting. Management has talked on recent conference calls about how they're really focused on growing the core business by getting into more markets, making hosting more accessible. Like I said, those lower price points. But then they teased in the most recent conference call, which is the fourth quarter of 2023 as I'm recording, that they're going to be moving into artificial intelligence tools. Now, what exactly does that mean? Well, we don't know exactly right now, but what they talked about was artificial intelligence playing a role in basically being your concierge. So can you go to Airbnb and say, hey, you know what? I want to take a trip to the Denver area and I want to stay in a tree house and I have a family of 4. And Airbnb could do everything to find that stay, give you a bunch of different options, give you activities to do, book flights for you. And it could do all of those things automatically with the use of artificial intelligence. It could even email you once a day with different options for different trips you could take around the world. I think that's what could ultimately be really compelling for Airbnb, because again, this is a technology company that is a platform company. So they don't need to build any of these experiences. They just need to connect the experience, the home, the flight, whatever it is, with the actual end customer. And so if you're making that end customer happy, you're making it easy for those people who are providing experiences and services to find customers. That's how you build that high margin business in the middle that is Airbnb. So that's why I think there's ultimately a lot of long-term growth potential. We'll see exactly what some of those tools end up being, But I think Airbnb has built a really nice position in the short-term and long-term rental space, kind of an alternative to hotels. They can always improve that business, but the long-term growth trajectory is in adding more verticals. And this is exactly how management has talked about it, adding more services that can benefit from the same kind of technology. Flights, experiences, services that you're going to want when you're at a given stay, transportation, all of these things are potentially value adders for Airbnb. So this is what you should watch for in the future, and hopefully the context of how the business makes money, how revenue is generated, helps in analyzing this company long term. But let me know what you think about Airbnb and what your thoughts are on the company's growth potential. Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.